Good morning. This is BHG, Financial Investments and Securities. I'm, of course, your host, the Wall Street Bully. Thanks again, guys, for tuning in. I kind of want to go over a stock today that is near and dear to my heart. I'm pretty sure it's also pretty close to you guys. I want to talk about Qualcomm. Again, that stock is Qualcomm Incorporated. Qualcomm's phenomenal. They are a tech company. I love tech companies. They exist within the semiconductor space. They design both chips and modems for cell phones. As of late, they were designing chips and modems for Apple. Apple has chosen not to renew their contract, and that's definitely going to affect their future revenue streams. So Qualcomm's definitely going to be affected in the short run. But as far as the long run, they're going to do great. They're going to do great. So let's talk a little bit about Qualcomm and who they are and what they do. So again, Qualcomm is a semiconductor. They exist within the semiconductor space. They are a chip maker for cell phones, but they're also pretty big in the 5G Internet of Things. So that's pretty much where they're saturated. That's where where the majority of their revenue comes from. And the future of the Internet of Things is going to be endless. So to be within that market now. That's phenomenal. That's good. This company is definitely in a great segment of the market. Let's take a look. Okay, yeah. Well, let's talk a little bit about the actual stock, though, now that we know about the company. Okay, so Qualcomm right now consists of 130.66. Again, that price is 130.66. Not bad. That's not a bad price point at all to buy in on Qualcomm. I conducted a fundamental analysis on the company earlier, and man, these are some of the best numbers I've seen in a very long time. Especially like right now within the tech sector, it's amazing. It's amazing. But let's get started. 52-week range is 76.16 for the low. The high was 167.94. I've actually seen Qualcomm as low as about $68 in March. Right before the pandemic hit, the company was trading around 68 to 70 bucks, which is incredibly low for Qualcomm. So I mean, if you could have gotten in right around that $68, $70 range, I mean, your growth would have been exponential. But I joke around about that a lot, but it's very difficult to get the bottom of a stock, to really find that price bottom. It's almost impossible. And, to pursue that, more than likely you're going to end up losing principal, and, you don't want to do that. So you really want to cost average down. And I'm going to do a video on cost averaging at some point, so you guys can really understand that and how important cost averaging is. Let's get back to Qualcomm. So 52-week low, 76.16, 52-week high, 167.94. It's currently listed as a near fair value. Yeah, I would agree with that. I do think it's, I'll take it a step further. I think it's actually undervalued as it sits right now. The PE ratio is 1871. Wow. Phenomenal for a PE ratio. For a tech company, most PE ratios right now are anywhere above 60, 70. So to see a PE ratio below 20 for a tech company, it's phenomenal. Wow. Yeah, wow, this is great. Qualcomm's also a dividend company. So that's just one little added bonus for having stock and a pretty good dividend as well. Here's a 6-month trend. So stock was going down. So it's panning out here. And it looks like it's about to break out at the current price point of 130.66. Wow. And let's take a look at the fundamental analysis on Qualcomm. This is a chart that I constructed. I like to conduct a fundamental analysis on any stock before I decide to buy, or just to have a better understanding of that stock. What the company's doing, where they're going, where they have been. When you understand the fundamentals of the company, it really gives you insight into that company and how well they're performing and how well they're going to perform. So let's take a look. As we talked about the P/E ratio earlier of 1865, man, that's good. That's amazing. Geez. Oh wow. A price to earnings growth of 0.68. Again, that's price to earnings growth of 0.68. Man, we normally want this number to be less than 1. That's kind of what we want to hover. Let me go back up here so you can see. Projected over the next 5 years. So we kind of like for it to be less than 1. 0.68. Again, for a tech sector company, amazing. Absolutely amazing. Wow. Return on shareholder equity, 153.25. Again, that number is 153.25%. Man, that is amazing for a tech company. Man, okay, let's take a look at return on invested capital, which is 31.92. Price to sales ratio, we want this number to be greater than 3. It currently sits at 4.99. Man, these numbers are amazing. Price to book ratio, most recent quarter, 19.79. Gross profit margin, 59.99. A gross profit margin of 59.99. That's almost unheard of. Well, it's almost unheard of in the tech sector. Even the net profit margin of 27.28%. Wow, 27.28%. Man, that's incredible. That's incredible. So most tech companies normally hover anywhere around 10 to 12% for net profit. So to have it this high lets you know just how well that company is performing in terms of liquidity, in terms of being financially fit. I always stress that quite often a financially fit and a fundamentally fit company. And so far, Qualcomm is looking to have both of these characteristics. Operating profit margin, 30.07. Wow, an annual growth rate of 46.74%. Let me repeat that number again. An annual growth rate of 46.74%. That is amazing. And I know we're coming off the heels of the pandemic, so the numbers are slightly skewed. But even if that's the case, still 46.74%. That's amazing. That's amazing. And most tech companies, growth is going to be a little bit high, just because last year again was the pandemic. But man, that's really good. That's really good. Let's see, we're talking about price to free cash flow. Price to free cash flow year over year. 17.60. Again, that's another amazing valuation ratio. Wow. Free cash flow. I'm going to do a video on free cash flow in the very near future, so you guys can understand just how important free cash flow is, what it's used for, and how the company can use it. So that's going to be very, very important. And I want to make sure you guys have a thorough understanding of free cash flow and free cash flow growth as well. But currently, the free cash flow growth for Qualcomm is 536.60%. Again, that's 536.60%. Wow. Now, the debt to equity ratio looks to be a little high. That's 4.82. That's a ratio of 4.82. I like for this number to be less than 2. So 4.82, that does kind of ring a bell of alarm a little bit, but I think Qualcomm is so financially fit that any debt they have, they're going to be able to pay it off easily. This company is, it's amazing, and they're performing amazingly. Total debt to total capital, most recent quarter, 67.94%. 67.94%. Again, that's a lot of debt. And I always stress that try to stay away from companies that are heavy on debt, because I always view that as an anchor. So you want to stay away from companies that have a lot of debt on their balance sheets. And I don't think Qualcomm is going to be drastically affected by the debt. Yeah, you see, it's even evident here in the quick ratio, 1.72. Again, that's a quick ratio of 1.72. We'd like for this number to be greater than 1. This demonstrates just how well the company can pay down on its debt. And a quick ratio of 1.72 is really good. That's really good. So I guess the net of it all, would I invest in Qualcomm as it is now? I would. I definitely would. I think the current price point is good. Price point of 130. I mean, I don't think that's bad at all. Considering where the company is going, I mean, we saw that reflected in the price to earnings ratio, both that and the price to earnings growth ratio as well. I mean, the company is great. It's amazing. I think that Qualcomm has a pretty good run ahead of it, and yeah, I definitely would invest in the company at this current price point. Yeah. But I am the Wall Street Bully, and this is BHG, Financial Investments and Securities. Thanks again, guys, for tuning in. Please don't, I always forget to say this, please don't forget to like, comment, and subscribe. Please don't forget to like, comment, and subscribe. Thanks again, guys. Be blessed, take care, and stay safe.